What's up? It's Matt. I'm here with Scott Malof.
How you guys?
Scott is my accountant, and he's a guy that I've known for, I don't know, what, about 15 years now? 15 years.
Back in the Flaps Pro Door days.
Yeah, back in the boat dealer days. So we're in the ROI Experts bar, which is...
I'll have a drink. A Manhattan Dry, please. No, Cosmopolitan.
Cosmopolitan?
Yeah,
that would put me to the test, me making an alcoholic drink. I could probably pour you a beer.
All right.
That's about my skill set. So
that'll work.
You said something I haven't told you at all we're talking about. I said I wanted to interview you, talk about business.
Not a clue.
You know, tax season's over. Guys like me actually have our taxes done now because extension season's over.
That's right.
The thing I wanted to ask you, because you said something to me, this was probably 15 years ago, and it stuck with me. And it's stuck with me ever since, and I think about it every day, is you said, Matt, it's not what you make, it's what you keep. And it was ironic because I remember going to one of our boat dealer meetings back then, and I was so enthralled with sales and the number of sales and the volume. And I remember... Top line. And I remember being on stage. We won the award the one year for the #1 boat dealership for Triton. And after the meeting, the guy says, hey, talk to me. He goes, can I ask you a question or give you advice? And I said, sure. This guy was a very successful boat dealer, always pulled up to the dealer meetings at his $1 million motorhome. And you knew he was right because he had everything. And I was talking to him. He's like, how many times have you seen me on stage in the 5 years you've known me? I'm like, I've never seen you on stage. He goes, you know why? I'm like, why? He goes, because I focus on profit. And to get on stage, you got to focus on volume. And he's like, that's a big problem in this business is the boat manufacturers would sell you whatever the hell they want you to buy.
That's right.
I only buy what I can sell and sell at a high profit. So it was ironic because he had said that, and then you were telling me on the other side. Talk about that, because I think a lot of businesses, a lot of people like myself focus on volume and sales versus profit.
Right. So another one of my sayings that I use with clients, I've got a number of sayings, and one of them is...
Are they Malofs?
They're Malofisms. Yeah,
Malofisms.
Malofisms. So, and I'm just stealing them from other people over my course of my career. But cash flow is king.
Okay.
You know, if you've got a product or a service, you want to bill for it, you want to collect it as quickly as you can. You want to take advantage of the terms of your vendors. Your CPA you want to pay first, though. But again, there's no secret to being a success in this country in business. It's, marketing and selling, and then controlling your expenses so that at the end of the day, you've got a positive cash flow. Yeah. But remember, it doesn't matter what you make. Well, it does. Obviously, your job is to make as much sales as you possibly can. My job is to try and come in at the end of the year and mitigate what we have to give to Uncle Sam. So whatever you're netting, again, in your case in particular, a chunk of that's going to go to Uncle Sam and Uncle Frankfurt. So the key is just, focus on cash flow, but so many people go into this mentality of, well, I've got $1 million of business.
Yep. Doesn't matter if it doesn't make money. I was talking to a friend, this was probably about 6 months ago, and he was so fascinated with how many clients he was closing and his sales. Right. And the last 4 or 5 years, actually probably since I've started this agency, I have focused on my bottom line more than anything. I've had a smaller agency than I could have the last 10 years, but I focused on making sure that I made money, my team made money, and that there was profit. Well, this guy was telling me his numbers, and not only was his profit number really low, but his churn rate was really high because he was selling to the wrong customers. Like every 3 months, his customers turned over. Whereas I've got clients from 10 years ago still. But we were talking about it, and he was telling me his numbers. And I said, you realize I make net income 4 times more than you, but your agency is 3 times the size of mine.
Right.
And he couldn't get his head around it. He was younger. He's in his late 20s, and he couldn't get his head around that. And I think, I see a lot of times in my business, you don't see it because you don't follow a lot of people like me, but there's a lot of digital marketers or marketing agencies like, hey, I'm on the path to a 7-figure agency, a $1 million agency. I told a guy the other day, I'm like, my goal is $1 million net profit. Not $1 million gross sales. Right. I had those days back in Plaps. I remember the one year we did like $4 million and we netted like $400,000. And then like 3 years later we did $15 million and we netted $400,000.
You're right.
I was like,
that's because your dad or you were buying all these,
everything.
these Hummers.
Yeah.
And you like to tell the story you had in the past about how I showed up 10 years ago, and it's like, why do you guys have like
7 cars?
7 cars. And I remember the explanation that your dad gave me, and it made no sense to me. It's like, that's just sucking cash out of the business that is wasted. There's only another rule. You never want to buy anything for your business, but for 2 reasons. Okay. One, to continue making the revenue that you're making.
So something that'll keep more revenue coming.
Or to enhance the revenue stream.
Okay.
Do not buy an asset or a car to get a tax deduction.
Yeah,
there are still folks out there in my profession who say, "Hey, Matt, go out and buy yourself a Maserati for the write-off," and it's like, no. If you need the car,
yeah,
that's when you buy it. If you need the graphic design equipment, or if you need to hire somebody, like you've hired Doug, he's going to help you make more money.
Yeah, because you're at that point you're investing in something that's going to produce revenue. That's what one of my clients told me a few months ago. We were talking about how he's grown his business. He says, Matt, every time I hire an employee, because he doesn't buy equipment, every time I hire an employee, I have a dollar amount I know that person will generate, or that they'll take off of the plate of somebody that generates revenue.
Right.
It's like Doug. When I hired Doug is helping us generate revenue. He also took a lot off my plate that I've added 30 plus clients because of me being able to focus on it.
Yeah, I mean, my personal example, and so here's a lesson that I've learned recently, and it should be a simple one, is that every year or every few years you want to go through, your expense list. Case in point, I was a member of a business BB&B, or Better Business Bureau, and it was like, I signed up for it when I started my practice, and it was like, why? It's $50 a month, it's nothing, but why am I doing this? So I canceled it. It wasn't driving any revenue to the bottom line. It wasn't getting me any new clients. It wasn't serving any other purpose other than it was a thing to do back when I started out.
Oh, yeah, everybody thought you had to be in the Better Business.
Everybody thought it's, so we canceled that, and I went on and reinvested that in something that was going to generate, additional revenue or make us more efficient or more profitable. At the end of the day, you're right. Top line does matter, obviously. Yeah. You got to have sales, but you got to collect that money, and you got to manage your expenses that are driving the business. So that at the end of the day, there's only two reasons to be in business in this country. One, to make a living. Number two, to one day sell the business. Yep. And hopefully, at a nice multiple of bottom line profit, because at least on Main Street, not Wall Street, but on Main Street, businesses that come in and buy other businesses, they're focusing on what's your cash flow, what's your profitability, and it's a multiple of that and some other formulas that we'll cover at another time. But that's the only reason to go into business for yourself, is to generate a living for yourself, for you and your family, to have money to spend and enjoy life. But at one point, you want to position the business to so what I do is I don't do tax returns. I advise clients. Like I'm working with a client right now that's been a client for 20 years. We're entering the denouement, the closeout phase.
Oh, denouement. You gotta give me like a Webster version of that.
So they're wanting to bow out. It's a very successful personal service chain up in Cincinnati. Done very, very well. Great clients, love them to death. But they're talking about succession. Another word for it is succession plan.
Okay, there we go. That's the Matt Platt version.
Okay, right. So it's just I apologize. My mother and father had used big words, so I just picked it up. But anyway. So we are planning to, let's window dress this business as best as we can, which is focusing on top line growth and maximizing that positive cash flow. Because when you come in, or I come in, or somebody comes in off the street and looks at your business and says, all right, how much do you want? Well, there's a formula for that, but it's driven by what the business will generate and cash flow back to the business. And a general rule of thumb, this is another Malofism. Again, I stole it from somebody.
Have you trademarked Malofism?
I should I?
Yeah.
Okay, we'll talk about that after this. So what you do is you want to, if you're investing $1 million in a business, you want to recover that $1 million from the cash flow of that business, probably 4 or 5, no longer than 6 years. Because if it goes beyond that, then it's like, okay.
You could have did something else with that $1 million.
Exactly. It's like any other investment. So, anyway, so cash flow is king. But it doesn't matter what you make. It only matters what you get to keep after tax. Because again, you can count on 25 or 30% under the current tax structure. Some will be less, some will be more.
Going away.
Going to Uncle Sam.
What about, I guess let's end the video with this, and then we'll go grab some scrumptious food. You ever been to Nation?
No.
We're going to hit Nation. It's like 2 blocks that way.
Awesome. I'm looking forward to it. Me and food, we're like this.
There we go. Same here. So we're end of the year. It's November Friday, I guess. November 1st is coming up Friday. So November and December, businesses are winding down. They're trying to hit goals. They're trying to make sure budgets are maximized and all that good stuff. What's 1 or 2 things you would tell a business? Like, hey, accounting tax-wise, it's coming up on January 1st. What is something you can do now to make sure you end the year correctly, but also prepare for next year?
So these are just tried and true rules for every business at year end that every CPA out there is going to give you. Your job is to make as much money as you can, and my job is to help minimize the bottom line because of taxes. Yeah. To the extent, one of the old rules is to accelerate expenses from next year into this year. Okay. So an example of that is if you've got vendor licensing fees or any kind of apps that you buy or any supplies, and you're going to be spending that money in the first quarter of next year, you're going to be spending it very soon anyway. Most businesses are going to be on a cash basis, or at least the clients I serve. So if you spend it today, even though you don't use it until next year, you want to pay for it now.
Okay.
You're going to be spending the money anyway, investing the money anyway. You may as well take advantage. Now it's a timing difference. Yeah. All we're doing is stealing the deduction for next year. The other thing is, I don't do this with every client. We haven't done this, but with a number of clients, I have what I call YETP, year-end tax planning meetings, where we sit down, we look at the books, we kind of do projections of the things we can do to get that income down, and then, a nice cash flow planning idea is to know what your tax liability is going to become April, and so we do tax projections. Say, you did great, Matt, but this is what you paid in. This is what you're going to owe because the business is being successful. So either physically sequester the cash for Uncle Sam, or mentally know in your head, put it in the parking lot. Okay, I can't spend this because I need it for April.
And here's the way to do that correctly, because I did it wrong many years. I've actually gotten pretty good at it the past few years. I'm rock solid right now. Open up a separate bank account somewhere else. I have mine at a credit union that's not even in the city. And so it's hard to get money out. And every week on Tuesdays, I transfer a dollar amount, a percentage of my gross sales that week goes right to that account, and it sweeps over there. Because what I have found is we did 20 grand this month. That means Scott says I got to put 5,000 over here for taxes. Well, then all of a sudden, something comes up, or you decide to buy something else, or maybe things don't go as well as you thought. And then you're like, I'll get it next month.
Right.
I'll get it next month. Right. And then 6 months later, Scott says, hey, Matt, you owe $25,000. You're like, oh, I only got 9. So don't do what he said mentally. Do what I say, because a lot of my viewers that are going to see this down the road are 1, 2, 3 person businesses. Right. And especially restaurants. Right. I mean, they're running their business, and take that money out of sight, out of mind. I'll never forget, this was the first year that it really worked hardcore for me. This might sound dumb to say, I forgot that money was there. Literally, you called me and you were like, and I knew you were like, hey, Matt, here's what you owe, here's when it's going to be due, let me know when you pay it. And I was like, oh, you got 24 grand over there. I had literally been sweeping money there and just out of sight, out of mind.
Well, and for people, and I have a number of clients, I won't name names, who are good at making money, who are very good at making money. Their challenge is spending money. Yeah. And so they're spending what they really don't have because of that hidden tax liability that springs up in April every year for everybody. And so like I said, so the 3 rules are, physically set up a savings account for it, set the money aside, just kind of demark it in your business checking account, or at a minimum, just know, okay, I need 20 grand in there. Yeah. I'm going to need that to yank out to pay for taxes, and that way. The other piece of advice is, if you've got a CPA, ask him to do some year-end tax planning with you, because there are other things to do. We're working with you and a number of other clients to maybe set up a more robust retirement plan, so that you can super juice the amount of your company retirement plan that goes into your account. Now, there's costs involved, and you have to fund your employees, but we can structure it in a creative way that more of the money that you pay yourself goes to your benefit, not to the rank and file.
Okay, how can people get a hold of you that need tax advice, small business advice?
MalofCPA.com.
MalofCPA.com.
M is in man, A is in apple, L is in love, O, F is in Frank, C is in cat, P is in Paul, A is in apple.com.
And I'll go ahead and put that in. Once I get this up, I'll put all his information in there. But fellow business owners, everybody has a problem with paying people to do stuff they shouldn't be doing themselves. I tell people this all the time. This is no joke. I have mowed my grass since I bought my house, our first house, in 2001. I partially mowed one section of it once. Now, granted, I have asthma, and I shouldn't be mowing grass. I probably could, but at the same time, I look at it and go, okay, if I spend that 3 hours doing that, what else could I spend 3 hours doing? It's either me spending time with my wife and kids or making money.
Right.
I'd prefer to do that.
Right.
And I run across people all the time that do what I do, that do their own taxes. And I'm like, you think you're like, I'm not as smart as you on taxes. I mean, that's ignorant. I'd rather pay a couple $1,000s a year to save 5, 10x that.
See, and the problem with geniuses, and I've said this many times, you're a genius at this marketing stuff, and you're a guru at it. But it's not your wheel. Accounting and taxes is not your wheelhouse. Now, you tried it.
Oh, I've tried it.
Much to my chagrin, my personal chagrin, over many years, until you finally, figured it out, and you're hiring the people to do what they do best, so that you can, maximize what you do best.
Well, the one thing I've never done my own taxes. You've always done them,
right?
Or somebody else before you.
It's the accounting side.
It's the accounting side I had to get myself out of, which I did. I'm out of it. Matt Plapp's out of the force there. But if you're a professional and you're watching this, if you're not going to hire Scott, hire somebody else.
Oh yeah.
Because you don't practice your own law. You shouldn't practice your own taxes. Restaurants are trying to get people to not eat at home coming to your restaurant. But yet you're in the back trying to do your own counting and bookwork. So hire somebody like this. Get the best advice.
Yeah.
That's all we got. Thank you.
All right, man.
Let's go get some food.
Yeah, absolutely.
Adios, Facebook.